Evergrande, officially known as China Evergrande Group, was once one of the largest, if not the largest real estate developers on the planet. In 2024, that is no longer the case, and the liquidation of the company has been ordered by a Hong Kong court. This is the end of the line, but the signs have been there for some time, and the death of Evergrande represents more than just a company going under. This is a representation of China's real estate crisis and the real-time struggles of China's economy, supposedly one of the most secure and stable in the world. That could be a signal of tough times ahead of everyone. This is the rise and fall of Evergrande, once China's largest real estate developer, and how China's real estate industry is in crisis. To get to the end, we have to start at the beginning. Evergrande Group, founded in 1996 by Xu Jiaying in Guangzhou, China, swiftly rose to the top as one of the world's largest real estate developers. Throughout the late 1990s and early 2000s, it aggressively expanded its operations, diversifying into residential and commercial projects across China. During the following decades, Evergrande continued its ambitious trajectory, acquiring vast land holdings and launching ambitious developments nationwide. Not content with real estate alone, the company diversified its portfolio, venturing into healthcare, tourism, sports, and notably electric vehicles. By 2018, Evergrande reached its peak with a net profit posting of 66.5 billion yuan. To put that into perspective, that's over 9 billion US dollars. That peak, however, would be short-lived. In the almost 6 years since then, the company has gone from record highs to phenomenal lows. In 2021, just 3 years after posting its highest profit, Evergrande posted a loss of almost 700 billion yuan. Yes, you heard it correctly. 700 billions. So where did it all go wrong? Evergrande's significant financial losses stemmed from a combination of factors, driven by its aggressive expansions and subsequent financial strain. The company borrowed extensively, accumulating over 300 billion in debt to fuel its rapid growth, positioning itself as one of China's largest firms. It's worth noting that this has always been the strategy: borrow to buy land, build and sell to pay back creditors, reset and repeat. It's what brought the company its immense success almost overnight in the 1990s and 2000s, when China's real estate market was booming. But it's that same strategy that hamstrung the company in the 2010s. Instead of downsizing or dialing back on lending to steady the ship, Evergrande decided that the only way out was to double down on borrowing, in the hope that the market would boom again, and they would return to their seat at the top of the world of real estate development. All that was compounded in 2020, as the Chinese authorities introduced new regulations to curb the debt levels of major real estate developers. Evergrande faced mounting pressure to reduce its liabilities. In response, the company resorted to offering properties at a substantial discount in a bid to generate cash flow. This aggressive expansion strategy, coupled with burdens of servicing its massive debt load, caused Evergrande to struggle with meeting interest payments on its loans, leading to a sharp decline in the value of its shares, which plummeted by 99% over 3 years. It's worth noting that this had always been the strategy: borrow to buy land, build and sell to pay back creditors, reset and repeat. Adding to Evergrande's woes were questionable accounting practices and inadequate corporate oversight. exacerbating its financial troubles. The company reported staggering losses totaling 581.9 billion yuan in 2021 and 2022, underscoring the severe impact of the crisis gripping China's property market. Evergrande's financial distress had far-reaching consequences for the broader real estate industry, as other developers faced similar challenges, defaulting on debts and leaving numerous projects unfinished across the country. Historically, China's economic growth heavily leaned on a flourishing real estate sector, driven by population growth. However, shifts in demographic patterns, compounded by stringent COVID-19 measures from 2020 onwards, altered consumer behavior, curbing housing demand. Concurrently, the government's crackdown on speculative practices within the industry exacerbated the situation, leaving developers burdened with massive debt and oversupply of housing units they couldn't sell at profit. Government policy had historically incentivized real estate investment to fuel economic expansion, fostering a speculation bubble. Local governments inflated land prices, passed on to buyers by developers who relied on pre-sale arrangements to finance their projects. Yet, when demand faltered and property price dipped, developers faced the brunt of the financial strain, resulting in abandoned projects across China. Structural issues in China's real estate market, compounded by regulatory change since 2016, further shaped the crisis. Regulatory interventions aimed at curbing speculations reshaped market dynamics, reflecting a transition from investment-driven growth to a consumption-oriented economy. However, this transition faced hurdles, impacting household incomes and housing demand. Escalating debt levels increased the financial strains within the sector. Chinese property developers grapple with mounting liabilities, with non-performing loan ratios soaring for corporate real estate loans. The ambiguity surrounding local government financing vehicles and rising non-performing loan ratios for mortgages compounded challenges. The crisis isn't caused by the collapse of Evergrande, but the two are intertwined elements of each other have helped to cause each other. The ramifications of all this extend beyond domestic borders, sending shock waves through global market due to China's significant economic role in the global economy. But who exactly is being affected by the crisis and the collapse of Evergrande in China? The potential collapse of Evergrande presents a large number of risks that echo across various sectors, posing threats to numerous stakeholders and casting a shadow over China's financial stability as a whole. Firstly, homebuyers who entrust Evergrande with deposits for properties yet to be constructed face the grim reality of losing their investment entirely. These individuals, often hopeful purchasers seeking their dream homes, could find themselves financially devastated with little recourse. Beyond individual home buyers, businesses with commercial ties to Evergrande, including construction firms and suppliers, stand on precarious ground. A collapse of Evergrande would cascade through the supply chain, causing a ripple effect of financial strain. Construction projects would grind to a halt, leaving contractors and suppliers with unpaid bills and potentially sending them into bankruptcy too. The knock-on effects could extend far beyond Evergrande's immediate sphere of influence, potentially destabilizing the entire industry relying on the real estate sector. Xu Jiaying was once hailed as Asia's wealthiest individual, but has faced a dramatic reversal of fortune as his real estate empire is at the brink of full collapse. Born into rural poverty in 1958, Xu Jiaying's ascent from humble beginnings to chairman of Evergrande exemplified the rags to riches narrative often celebrated in China's economic boom era. With a fortune estimated at $42.5 billion in 2017, he embodied the success achievable through perseverance and hard work, earning him admirations and monikers Belt Brother after viral photo showcasing his lavish lifestyle with private jet, multiple yachts, mansions all over China. Xu Jiaying's entanglement in investigations over suspected illegal crimes aligns with President Xi Jinping's drive for common prosperity and the crackdown on the super wealthy's display in China. Under President Xi's leadership, China is shifting its focus from rapid economic growth to addressing income inequality and fostering a more equitable society. Individuals like Xu, often showcase of extreme wealth and conspicuous consumptions, have drawn increased scrutiny as symbols of income disparity. These investigations reflect the government's determinations to hold accountable those perceived to have disproportionately benefited from China's economic boom. By targeting individuals associated with excessive wealth accumulation and speculative business practices, authorities aim to reinforce regulations and promote wealth redistributions. Xu Jiaying's situations also underscore broader efforts to combat corruption within China's business elite. In the context of Evergrande's financial woes, Xu Jiaying's legal troubles have implications beyond individual accountability. As the head of one of China's largest real estate firms, his actions impact investors, home buyers, and the stability of the financial system. This string of connections underscores intersection of politics and economics in China's modern society, and how easily people's fortune can be made or broken. Evergrande's CEO is ashamed. Its debt level is off the chart, and the authority calling for to pull the plug. And where do we go from here? Once a liquidation order is issued for Evergrande, a series of procedure steps will ensure, starting with appointment of provisionals and official liquidators. These professionals will assume controls of the company's affairs and assets, with the primary objectives of selling off these assets to repay the company's outstanding debts. During this process, liquidators may explore the possibility of proposing a new debt restructuring plan, particularly to offshore creditors holding significant debt in Evergrande. Additionally, they will conduct thorough investigations into the company's affairs, examine its financial records and transactions. Any instances of suspected misconduct by directors may be referred to prosecutors for further action. Although Evergrande has the option to appeal the current liquidation orders, the process will continue to move forward while any appeals are pending. Consequently, trading of Evergrande shares has already been suspended in compliance with listing rules that require companies to demonstrate sufficient business operations and asset values. While Evergrande potential liquidation undoubtedly poses risk to capital market, it's very important to note that its situation is unique due to its massive scale and complexity. The focus remains on completing existing projects to mitigate broader impacts on the property sector and the economy, underscoring the criticality of managing this crisis effectively. The phrase "how the mighty have fallen" gets used a lot, but in this case, it surely applies to Evergrande. Held up as the biggest and most successful developer on the planet, rising to success over the course of 30 years, carrying the weight of the Chinese economy and the real estate sector on its back, only to be left bearing that weight when the market faltered. We don't know for sure whether this will be the absolute end of Evergrande, but this once mighty giant of real estate development is unlikely to bounce back anytime soon.